We are now ready to move on to the next session, which is on hydropower development risks and financing opportunities. And in this session, we'd hear from Mr. Prateek Bagaria from Singularity Legal. Welcome, Mr. Prateek, to the conference.
Thank you.
Yeah, I will briefly introduce you to the delegates, and then we'll be ready to hear from you. Mr. Prateek Bagaria is partner at Singularity Legal. He specializes in advising energy and resources, construction and infrastructure, shipping and trading companies, and also institutional investors in shareholders and joint venture disputes, also in operational disputes and sovereign disputes. His range of experience includes advising clients on international arbitrations, international mediations, cross-border disputes in India, Indonesia, Israel, etc. He also acts as a strategic counsel in cross-border investment and joint ventures and trade deals. Mr. Prateek holds an LLM in international dispute settlement. And I'll hand over to Mr. Prateek now for his presentation. Over to you, sir.
Thank you so much, Priyanka. And good morning and good afternoon to everyone who's made themselves available to have a discussion on something which is very relevant today, hydropower, financing opportunities and risks. When we talk about Africa, it is clear that renewable energy is going to take the center stage in this decade. There are commitments from many countries to decarbonize, and no country has been able to do this without a large element coming from hydropower. As the world's largest producer of renewable energy, hydropower ensures global decarbonization goals remain within reach while implementing variable renewable sources through its flexibility and storage. The International Energy Agency, in its report 2050, published in 2021 May, notes that hydropower is the essential foundation for the transition and to have change of keeping global temperatures in check below the 1.5 degrees Celsius mark. The International Renewable Energy Agency, in its Africa 2030 roadmap, estimates that by 2030, there is going to be 330 gigawatt of renewable, of which 100 is going to come from hydropower. So clearly, when we talk about the opportunities in hydropower, there is a vast potential. 100 gigawatt of hydropower within the next 6 years or 7 years is what agencies have estimated the need and opportunity in the market. And hydropower is deeply woven into the fabric of Africa. This is because of the abundant untapped potential and at least 7 major rivers: the Nile, the Niger, Congo, Senegal, Orange, Limpopo, Zambezi. Africa is well endowed with hydropower potential. And over the coming decades, the countries on the African continent can address fundamental challenges of energy access, energy security, climate change, all by using and harnessing the powers of, or the resources of, these rivers. And by choosing this sustainable method over fossil fuels, as we just heard, Africa can create new jobs, can create greater economic growth, harvest social and health benefits, while helping mitigating devastating impacts of climate change. So overall, when you talk about opportunities in the hydropower sector in Africa, I would say there are fantastic opportunities. It's a win-win. However, only 11% of this potential has been utilized so far. I think this lack of enthusiasm observed amongst the investors can be attributed to the fact that capital intensive hydropower projects have delivered disruptive surprises to investors. On the one hand, they provide a reliable and cheap source of electricity, which is great in terms of the ESG investment. But on the other hand, due to the uncontrolled exposure to climate uncertainty and ignorance, they have resulted in costly penalties to the stakeholders. Moreover, the hydropower industry comes with its own sets of challenges and risks in terms of political risks, social economic risks, such as displacement of large populations, environmental risks, technical risks, such as hydrological and geological conditions. This leads to substantial increment in the project costs and consequent apprehension amongst its investors. Therefore, seizing the opportunity will not only require strong political will, but a holistic policy approach to fulfill and to reap benefits of what hydropower has to guarantee. Now, in today's session, I intend to cover two parts. One is how the financing can work, or the financing opportunities, in which ways and structures can it be harnessed. And the second being the disputes. What are these risks? What are these disputes which are regularly faced in building such mega projects like hydropower? When it comes to investments, I think there are essentially 3 to 5 ways of doing it. But the true broad sectors in which I would divide the financing is one where the sovereign takes the risk of the financing on their own book. And the second is when the financing happens on the book or the revenue which is generated by the power plant itself. I think the first one, where the sovereign takes the risk of the financing on its own book, I think we've seen two major models of this form of financing. One is, of course, the World Bank model. Now, during the 20th century, most hydropower projects in Africa were wholly owned by national government or state-owned utilities, with their construction finance loans from multilateral development banks, in particular the World Bank. Now, this has been one of the largest ways in where the state ends up securing its asset. There is a lot of pressure on the state to ensure delivery, ensure running and management, and all other such forms of activities which come with this project. And any failure would rather create significant debt pressure on the sovereign's books, affecting the overall growth and development of the nation. Closely connected to this is the Chinese model, if I may. And this is where you have the export credit agencies effectively financing their own construction companies. And they are tied up in the sense that the finance would come in if you use the Chinese construction company to develop the project. And once the project is complete, it's operated through the host government or state entity, but the revenue of it is tied up in that sense to repay the contractors, and the debt for non-payment or underutilization is on the book. In that sense, it's the famous Chinese debt, where we've seen those debts being excused in exchange of then the power to control either the power plant itself, or to pretty much take certain parcels of land in port areas and other strategic defense areas in Africa in exchange of funding those projects. So this is the model in which the state has significant exposure. And the new age way to do this, but in a similar way, are green bonds, where you have fixed income loans given to finance and refinance projects and assets, where bonds are issued by the state at the end of the day to develop renewable and green energy, but a more sustainable way because it plays in the international bond market. There is no political debt trap which the state goes through. But this is a model. These are the models where the sovereign takes the debt. Now, as we heard in the last session as well, this may not be a sustainable and the only way to develop big hydro projects. You may not be able to meet capacity by the state only being involved and leveraging its book. So the PPA or the IPP model is something which has seen success globally and is now pegged to see success in the continent as well. The main distinguishing factor between the two, as we know, in the PPP, the project essentially is in an SPV, and that SPV is first, commissioning the project through construction or subcontracting it for construction, and then having the power plant under its control and then earning regular revenue from the sale of power to people who need it. And it's in a partnership with the state utility. But in an IPP model, the IPP is given an independence to pretty much run that show itself and sell power and collect money and be a state utility in that sense. Now, in both these models, you see success which is possible. Many adjustments have come in the recent days. While we have not seen this in Africa as yet, but there is the hyper annuity model and the InvIT models, which have become very successful globally when it comes to such recurring revenue streams. In those kind of projects, what we've seen is that the recurring revenue, which is guaranteed in these projects, those revenue sources are used to bring in third-party capital once the project is complete, and the ownership of the project is within a trust, where the beneficiaries of the trust reap money from the running of the project, and the construction costs are paid out by raising money by leveraging the project itself. This seems to be a model which is succeeding and has potential even in the secondary market. And I think a combination of these is something which is essential for the project to succeed. Again, in the past, we saw private financing as a big source of capital, or people at least considering it as a big source of capital. But I don't think hydropower is the right kind of project for private financing, fully private financing, because I think the time which is taken to the return, it doesn't match the expectation of private capital. And you will see that, therefore, that privately funded projects such as the Bujagali plant in Uganda, that's the only known successful privately funded project. Whereas publicly financed projects like the Grand Renaissance, Inga 1 and 2, GB3, Adjalara, Isimba, Manantali, Kaleta, the list goes on. You have several publicly financed successful projects. So going into these secondary markets or using a combination of something like an hyperannuity or an InvIT, and maybe green bonds with it, could be something which brings in that capital, which makes people participate at large in these projects, also brings in the corporate governance, which comes in with public capital, also reduces reliance on certain sources of capital. But that said, hydro projects come with its own challenges and disputes. And I would say there are three main categories of disputes which we see very regularly in hydro projects. One is the construction of the project itself. A large part of it interacts with state permissions, environmental clearances, ecological concerns. And many a times we see delays in those projects. For example, in a large hydropower project where we were advising about a group of 6 private equities who had invested almost $1.3 billion in the hydropower project. We saw the project fail because the hydropower project ran through rivers across various states, which meant there were water disputes between states. So a permission from one state wasn't enough for the project to successfully run because interstate disputes stopped the project at one level. Now, these kind of issues and environmental concerns or displacement of people living in the ecological region, or even environmental disasters which can come in mountainous terrains, etc. All this slows down projects and leads to a lot of disputes and delays and cost overruns. Similarly, of course, the state itself may not have a very robust contracting mechanism, using localized contracts instead of international contracting, not using good claims and delay procedures, not using sufficient variation mechanisms and accounting for them in the contract. They lead to a lot of cost, especially at the EPC segment of it. And that creates overall impact on the cost of power, which would be generated from the project itself. And this is one big segment of dispute we regularly see, and I think it's a risk which needs to be addressed, both by the investors, by pushing down things like a pink book project, especially when there is external capital, or using international contracting methods outside FIDI to ensure that the project implementation is smooth. But this is not the only problem which hydropower faces. And this is not a problem for hydro only, it's a problem for Africa in general. There are a lot of disputes which comes in from discriminatory awarding of contracts, nationalization of projects, change in legislation, political instability, suspension and interruption of operations, wrongful termination of contracts, wrongfully motivated revocations of incentives, renegotiation of power purchase agreements, unpaid invoices, political unrest, the gambit of things which go into investor-state disputes. And I think that's one big risk when it comes to investing in Africa. Statistics for investment disputes involving Africa evidence the steady increase of the same over the last 2 decades. Despite the economic downturn caused by COVID-19, the ICSID, which is in Washington, D.C., and looks after investor disputes, the Center for Settlement of Investor Disputes, had registered 58 cases in 2020 despite COVID, and at least 9 of this involved African nations, Algeria, Cameroon, Zambia, Benin, Tanzania, South Sudan, Nigeria, Egypt. All of them were sued for one of these activities which were considered unfair by investors. Even in 2021, there are already 3 cases against African states, Tanzania, Nigeria, Mauritania. And I think electric power, other energy, construction, they form the main chunk of these claims. So what we see is that state interference or non-compliance with international obligations by the state is one large area why claims and risks can come in. And the government responses to these risks are very important to determine. I think the last gambit is, of course, lenders' risk or financiers' risk in cases of default. There are projects and there are promoters who are financed where we see a large-scale diversion of funds or intergroup transactions or fraudulent transactions or all those sorts of things which effectively funnel the lending money into other sources rather than development. We've seen this at quite large scale in areas like Nigeria, especially in oil and gas sector. We are currently doing almost a $1.8 billion recovery for a consortium of banks who have invested in Africa but seem to have lost all the revenue stream to diversion. And this is another area of fraud and non-payment, which creates massive risk to investors, especially when it comes to to regions in Africa. So in summary, what I would say is that there is huge potential of hydropower in Africa. 100 gigawatt in 7 or 8 years is very promising, which gives a huge potential to investors. But two things have to be kept in mind. The financing model which is adopted has to be new age. Exploring something like a HAM or an INWIT is going to be doing wonders for a jurisdiction who's not seen so much public participation in the past, and it could create good corporate social responsibility and corporate governance, which comes in with it. And second, of course, in conclusion, is the risks are immense. There is environmental risk, there's government risk, there's contracting risk, there is fraud and diversion risk. And these risks have to be assessed right at the start of the project to ensure that the hydropower development is not jeopardized. So this is my part in my conclusion, and I leave it to you all to raise questions to me of what would be of interest.
Thank you, Mr. Prateek, for your remarks and for highlighting some very important points regarding risks and financing opportunities. We'll now move on to the questions. So we'll take the first question from the delegates. One of the major problems that Africa is facing now are the TNC of DFIs. How do you think this barrier can be turned into an enabler in immediate future?
I think that's an interesting question. And I think in the near future, what can be done, as I said, is there has to be confidence which needs to be built in. And if we are able to convey that while there are risks in the projects, there would be also benefits which are possible, and there is a sense of guarantee in the returns which can be made from the projects, then the development financial institutions are going to have more confidence to really fund these projects. But again, as I said, there's a lot of difficulty in understanding governmental commitment when it looks at taking money from DFIs. And I think a mix of DFI and commercial bank financing could be a solution how you can bridge the confidence gap.
Mm-hmm. Okay. We'll now take the next question. Who's the most corrupt on projects, engineers or politicians? Is there a way projects can be financed directly and costs paid to suppliers and contractors?
So yes and no. So answering the first question is very difficult, of course, and I wouldn't be able to do that in this public forum. But I think you cannot clap with one hand, and we've seen this in all parts of the world that it's both sides of the gambit has seen corruption, but at the same time, on both sides, we've seen pretty astute players as well. So there's no one corrupt person in the system. But I think the solution, as I say, is to have all stakeholders to having skin in the game. And if the project is being financed from the revenues of guaranteed power purchases on the later stage of the game, and those revenues are given to third parties as their returns on the units they hold in a project, it overall brings in a large amount of accountability on the project. And you could then use private financing as only a means to bridge the gap till you are able to raise public financing.
Mm-hmm. Okay. Another issue in Africa is the hybridization of hydropower system. Can that help Africa so far as hydropower is concerned?
Oh, absolutely. We just heard in the previous session that one source of renewable can never be the solution. And it's going to be a combination of these various sources which need to come in. So hybridization is clearly a solution, but it wouldn't take away the challenges and the risks we discussed today. There still has to be government accountability. There still has to be international contracting. The banks and the development finance institutions, they need to bring in good governance and ensure project milestones are met. Government guarantees are not suddenly changed in the middle of execution of projects. Policy shifts from hydro to solar don't happen quickly. Those kind of things are very necessary, more than of course, hybridization is going to succeed in the way energy is produced in Africa. But still, if the government commitments keep shifting, or there is corruption, as we just heard, the success story will be hindered. And we have the famous example, the ICC arbitration, which is going against a major project in Africa, the Grand Ethiopian Renaissance Dam. And you have the Mamabila project in Nigeria. Both have gone into arbitration despite there being all sorts of hybrid solutions coming in those projects. But again, as I said, it's government implementation which is key.
Okay. So moving on to the next question, which part of Africa is most at investment risk and why?
So again, I don't want to single out any place for being more risky, and I don't think that's my expertise to analyze that political risk. But I would say there are certain pointers which people can use to assess whether that particular region is risky or not. And I think one of the major pointers which is there is transparency. How clear is the government policy? How far visioned is it? How consistent it has been in completing a policy cycle from when it implements it? And how often is it sued in investor state dispute centers? I think these parameters are what we assess when we say which jurisdiction is risky. And take, for example, Nigeria, right? It's been sued very often in investor state arbitration. It has seen quite a lot of corruption issues. But at the same time, when I peg that to a Benin or a Togo, the answer may be that Nigeria is not that risky. So it's relative in that sense. But I think jurisdiction has to be tested on its own merit, and Africa per se, being a growing economy, being a growing democracy in some parts, and some parts having difficulty to accept and implement democracy, it is still a risky jurisdiction. And some parts are good, but some parts still have the traditional problems, and hence investment protection is very difficult. Investment protection is very necessary when it comes to investing in Africa.
Okay. Before we end this session, just one last question. So, what, according to you, are the interventions required to attract the required investments in Africa for hydropower development, and how can these disputes be minimized? Maybe top 3 interventions that you could suggest.
So I think the first is international contracting, right? We don't need a pillaged contract or a new experiment. We need to bring in international standards of contracting. As I said, if there is external source of capital, the Pink Book is a very successful model because it gives the financier some control to manage the project and its timelines, and withdraw capital when things are not going hunky-dory. So it's not completely giving away money. Sorry. Second, as I said, in the financing stage, a hyper annuity model can be a very successful implementation. We've seen this in different kinds of projects. We've not seen this in hydro, as I said, in Africa. But a hyper annuity model brings larger public interest. Also, the initial cost involved in construction is limited because a large part of it is then paid out by monetizing the asset itself. So it reduces the need of that huge capital. And the third, I think, is investor guarantees by states either through their domestic laws of giving some investor guarantees or through investment treaties where they have given certain commitments of good behavior to the investor. Those are the minimum requirements, I would say, for these disputes to not take place.
Okay. On that note, we'll end this session. And thanks a lot, Mr. Prateek, for joining us today. And we look forward to having you at our future conferences.
Thank you so much, Priyanka. Thank you, everyone, for listening.